Big news in the banking world today. Columbia Banking System has officially completed its acquisition of Pacific Premier Bancorp, bringing two major regional players together under the Columbia name. On paper, this merger marks a bold expansion into Southern California, where Pacific Premier built a strong presence with community and commercial banking. Columbia, traditionally rooted in the Pacific Northwest, is betting that combining resources will create a powerhouse across the West Coast. But here's the catch. Banking mergers are never just about bigger balance sheets. They're about culture, integration, and execution, and history shows that's often where the cracks begin to show. Columbia Banking System, the parent company of Columbia Bank, has long been a recognizable player in the Pacific Northwest, with a network of community branches and a focus on steady, regional growth. Pacific Premier Bancorp, on the other hand, carved out its reputation in Southern California, serving small businesses, commercial real estate, and local communities. When the merger was first announced, analysts noted that it would create one of the largest regional banks on the West Coast, combining billions in assets and a wider customer base. Now that the deal has officially closed, all Pacific Premier locations will eventually operate under the Columbia brand, signaling a unified strategy to compete more aggressively with larger national banks. The real question now is whether this merger will create lasting value or simply add complexity. On the surface, Columbia gains immediate access to Southern California, one of the most competitive banking markets in the country. The combined entity boosts its balance sheet, expands its branch footprint, and potentially gains more leverage with both depositors and borrowers. For customers, this could mean greater convenience and a wider range of services. But there's also the risk of losing the community bank feel that made both institutions popular locally. From an investor's perspective, bigger doesn't always mean better. Cost synergies must outweigh integration headaches, from IT systems to employee culture. We've seen past bank mergers collapse under these pressures. So the challenge for Columbia is clear. Prove this isn't just about size, but about delivering smarter, more sustainable banking. Otherwise, the very growth they're chasing could turn into their biggest vulnerability. In the end, Columbia's acquisition of Pacific Premier marks a significant reshaping of the regional banking map. The new Columbia now stretches from Seattle to San Diego, but scale alone won't guarantee long-term success. How they handle customer trust, employee morale, and operational integration will determine whether this merger becomes a West Coast triumph or just another banking misstep. What do you think? Will Columbia emerge stronger, or will the challenges outweigh the benefits? Share your thoughts below, and don't forget to like this video and subscribe to Brand Guy for more quick news on the business world.